Good morning, everybody. Welcome to the Game Plan. My name is Gareth Soloway, Chief Market Strategist here at VerifiedInvesting.com. So we have a lot to cover today. We are seeing the stock market down pretty sharply this morning after U.S.-Russia tensions flare. Now, the key is this going to be something that's going to trigger another leg down in the market? We're going to take a look at the charts and find out. Overall, we got Walmart earnings this morning. That stock is up slightly on the day. Lowe's reported earnings, and that stock is slightly lower as well. Bitcoin slightly higher. Gold is also continuing its rally, which again, I've told you that should happen off of that technical level we discussed. All right, let's get into the action here this morning. Let's take a look at the charts. You can see that this is what happened this morning. So at right here, about 4:30 to 5 in the morning Eastern time, we had that news break that, again, there were missiles fired from Ukraine that went into that portion of Russia that the U.S. gave permission to fire into, that the North Koreans are now fighting against Ukraine in. Then Putin comes back and says, okay, well, I'm going to change this doctrine that says that I can use nuclear weapons, even if the country isn't directly essentially attacking us. So there's a tit for tat going on here, in my opinion. And let's be fair, Putin doesn't need to change a document to use nuclear weapons. So it's clearly a warning kind of sign, just like back and forth. And this is what's going on, guys. You're seeing this kind of tit for tat, like I said, where the Russians get the North Koreans to fight. Then the U.S. says, okay, if you're going to do that, well, we'll let them use this. And then now Putin is changing this document. But ultimately, it does increase the geopolitical tensions in the market, and it just puts more unknowns out there. So what we saw here, this is where that initially happened right here. Then the market kind of said, okay, listen, so far that could be just an act, and the market's kind of trailed off in the pre-market like here. Interestingly enough, what type of pattern formation is that, right? What type of pattern? We know that a sharp down move or a flagpole like this, and then if you have like this, that's a upside down flag, or what we call in technical analysis a bear flag. What ends up happening here, you get the move down, the bear flag, and then the secondary move to the downside where the markets are trading lower. Now, what's interesting here is that we have Friday's lows. We then bounced a little bit yesterday. Interestingly enough, if you looked at the indices yesterday, they recovered 1/3, almost exactly, of what they dropped on Friday. So you have this little bounce back, a 1/3 retrace, as we call in the technical world, and then we obviously are now heading lower. The question is, will we take out those lows? Here's the S&P 500. Here's that wedge pattern that I've talked about with you guys pretty much nonstop for the last couple weeks because it's been so important. Obviously, the breakdown, the retrace, and now we're coming back down here. The reason these two lines are right here, these are your two key supports for the day. You have this one right around 577, give or take, so 577 right there. Bear with me as I get that correct. So 577 there. That's your first technical support, and then 569.9 right there, all right? So again, those are your two key levels. All right, so the key being is this is a gap fill. This would be a pivot low. Those would both be levels that we would want to monitor today if the market continues to drop. Now, we're not down there just yet. The first step is, can we take out the lows here from Friday? That's step number one. If that gets breached, then you have to start talking about the gap fill right there at around 577, give or take. All right, so again, we're looking at a market that is skittish, right? We know that the market knows, at least any big investors knows that the stock market is extremely overvalued, on par with the dot-com bubble and some of these other things. Obviously not the dot-com stocks directly, but the whole market back in 2000 had these type of valuations that we see today. And it does make really institutional investors a little bit more nervous and ready to pull the ripcord if they need to. All right, let's go back here and talk a little bit more about the NASDAQ 100, because the NASDAQ 100, again, we can see right here on the chart, is the NASDAQ 100 has come down here and broken a trend line in the pre-market. Now, we are getting a little bit of a bounce here pre-market. You can see, again, the tail starting to form. But here, if we go to the daily, look at what we are in the process of breaking pre-market, this trend line. Now, the reason why this is important here, if we zoom out, remember the top line is your 2021 high to your July high of this year to your November high that we just made recently, right? Our lower line, that's from August lows. So if we go back to the big board and discuss this on a technical basis, what do we have here? Well, this was our lowest point from the big sell-off in August, and this began a new trend in the market, right? So you have the low here to here and to here. So there's clearly a higher low trend line that's working. And I'm stressing the word trend because this has been a trend to the upside from the August decline. If this were to break, that is problematic for the markets on a technical basis. In addition, what do we know is happening tomorrow after the close? NVIDIA is reporting earnings. So you have to kind of watch and see if we connect any kind of puzzle pieces or breadcrumbs here. If the market breaks, is that telling us something potentially about what NVIDIA could do? Or can NVIDIA come out and blow the doors off earnings and save the market? I mean, I think that's the kicker here, is that if you're like me, you're saying, okay, we're on the borderline of a breakdown in the S&P, a NASDAQ potential breakdown. Can NVIDIA save this market and push it back to the all-time highs? Or does it put the final nail in the coffin and this market starts a bigger correction? Sure, you'll have support there, you'll have support here, you'll have support here, but once you break this uptrend, inevitably you will go back, I would say 8 out of 10 times, and test that August low. So there is a big concerns on a technical basis for the markets overall. All right, let's take a look at a couple other things here now that we've gone through the NASDAQ. We're going to take a look at some of these stocks here in the pre-market. We can see Walmart had an initial pop on earnings and then has come back in and is basically flat to positive. I did talk about this yesterday looking at the daily chart, and basically if this stock closes below 83, I think it's got a big move down. Right now it's above 83 in the pre-market, but what I talked about to you guys is really important here, and that's this, right? If you think about it, we have a stock that's trading at a 40 PE as a retail stock, retailer. That is extremely expensive historically, almost unheard of. And so there's a lot of risk here, even though they had great earnings, and they did have great earnings, and their guidance was solid. We've talked about this before, that the company has to report such amazing results that it's almost impossible for them to do. Now, again, it is almost, they almost did it because the stock is neutral to positive, but let's watch and see. I still think a bigger move to the downside is coming on Walmart in the coming weeks and months. All right, looking here at the charts, guys, we go to Lowe's. Lowe's reported earnings this morning. That stock is fractionally lower here. If we go to our bigger time frame, now I want to show you guys this, the beauty of charts. I'm going to take a trend line from these lows, right? So let's take a trend line. We're going to do a parallel here. Let's connect the two major lows. You guys can see that as clear as day. Stretch that up here, and what do we get? High, high, and high. Look at the beauty of that parallel. Now, again, was this stock into resistance? Not really. It wasn't like it was trading up here, but it certainly was in an uptrend here, which makes it, again, vulnerable for a miss, and the stock is just trading down slightly on the day. There's no trade levels here. Just like Walmart, it's not a big enough move in the pre-market to really get my attention as a day trader. Now, SMCI. Here we have SMCI trading up sizably. The stock was above $30 in the overnight there. You can see, again, above $30 here. It has faded back to 27. Now, the kicker here is this, right, is that SMCI finally got a new auditor on their team here. The question is, they haven't really put out these financial statements yet, so I don't think they're going to get delisted as far as I know, but at the same time, it's the hope that they can right the company, get rid of these accounting issues, whatever they may be, and essentially get back to business as usual. That's why the stock is up. But remember, we don't know yet what the issue is with their financials. Like how off were their financials that they were reporting? Was it fraudulent? Was it just, some missteps here? They forgot to carry the 1 or put a decimal point. We don't really know. So there's still a lot of risk in this stock. And again, investors probably should be careful. Looking at NVIDIA, guys, again, we got to take a look at NVIDIA going into earnings. We did close below an upsloping trend line. Now, this trend line is very similar to the QQQ trend line, right? The only difference is the Qs were still above, although today we may end up below. But the point being is that on NVIDIA, this is making the chart vulnerable going into earnings. It is not a confirmed breakdown, so I stress that. There's no confirmation yet. We'll have to see what happens today. To confirm, it would have to close below 137. All right, in that case, it would raise the probabilities of downside on earnings. If it doesn't, then be very careful. It could either shoot up to 158 on earnings, or you could get that bigger move down that puts the nail in the coffin for the markets. All right, let's go to Bitcoin here. Bitcoin pre-market here is trading, or I should say at least pre-market stock-wise. Obviously, there's no pre-market for Bitcoin, trading at 91,600. Now, the kicker here, again, if we zoom out, we still see we have these levels, right? We still have this level right here coming through here, and then the two highs from 2021, and that's creating this kind of pseudo-resistance zone right up here, which is not broken. Now, if we go to the big board and we look at this, there is a couple things that we have to be aware of, right? And I talked about this last week. I said, listen, we're into resistance, but if we chop sideways a lot, you start to build a bullish consolidation pattern. So again, here's your flagpole, right? And here's your sideways chop. Now, again, it doesn't mean that it's going to break out, but if you're thinking about probabilities, the probabilities are inching up a little bit. So when we first came into it, let's talk about probabilities. When we first rallied into this line here, the idea is that you should get some sort of pullback. In fact, it favored a pullback with an 80% chance of that, right? Which means only a 20% chance it was going to continue. Now, as each candle goes sideways, the probabilities here start to drop. So now you're probably at a 60% chance that it pulls back versus 40% chance that it goes up. Now, every day after, it's going to increase the odds of going higher by 5%. So in 2 days, by Thursday, if we're still sideways here, it would at then that point be 50-50 probability. And this is what a technical trader does. You know, so many people out there, they think it's very black and white. Investing, it's either like, oh, you're bullish or you're bearish. You know, you either think it's going up forever or you think it's going down, right? In reality, a good technician is always evaluating the new candles on the charts. So every time we get one of these green or reds, or even the dojis, which are basically just the pauses with, the tails and the wicks, it's giving us more information. It's either forming a pattern, breaking a pattern, making a move into a technical support or resistance, and it's telling us information each and every day. And so you have to, as a trader, be willing to understand that you might have been bearish here, but now you shouldn't be quite as bearish. Doesn't mean you're bullish yet, but you might not be as bearish. And if it goes a little more sideways, then you got to be, all right, now it's neutral. Now it's 50-50. And if it continues, then it starts favoring the upside. And we know MicroStrategies yesterday bought another $4.6 billion. They didn't buy it yesterday, to be clear. I think it was like a week and a half ago. But again, $4.6 billion, and I think they're trying to buy a ton more, which, by the way, makes me wonder a little bit about how much they're supporting the price, and once they get that amount, does that then is there an air pocket below that could cause Bitcoin to pull back at that point? We don't know that, but obviously just keep an eye on it. The point being is, right now we're trading at 91,700. Let's see where we go, but again, you are getting the preliminary formations that could be bullish on the charts. Okay. Let's go to gold. Now, gold and Bitcoin, to some extent, both are up today, right? And the kicker here is that gold is up because of the geopolitical concerns. And so we know that, obviously, the tensions with Russia and the U.S. over Ukraine, they are spiking a little bit, and that's pushing money into gold. What's amazing about this, folks, if we go back to the big board here, is that you basically knew that ahead of time. Now, again, we didn't know the news, and I want to be clear about this. This is one of the most fascinating things about technicals, is that you don't know the news that's going to trigger it. That's the after the fact. But what we did know is very clearly we were into technical support here, and it was telling us gold should bounce. Lo and behold, gold bounced sizably yesterday. The dollar pulled back. Today, the dollar's up a little bit, but gold's going up anyways because of the increased tensions. And I think there's a little of that in Bitcoin today as well that's pushing Bitcoin to the upside because of those tensions likewise. All right, so where are we going on Bitcoin, on gold? So the first level to watch is this little low right here. That's around 26.55. But then in reality, and I think I talked about this yesterday, we could see the midpoint, the dotted line. I hope you guys can see the dotted line here. Dotted line is really your level, and that's around 26.90 to 26.80. So basically 26.55 to 26.90, that's going to be your big test for gold. Can it get through and start making a run to the all-time highs, or is it going to get rejected and have to come back and fight support again? All right, so again, little things like that we want to pay attention to. But either way, guys, fascinating move on gold. And again, if you followed me, if you're part of my commodities service, Smart Money Commodities and Miners, I have us long Newmont Mining. We have the GDX long, and those are all in the money very nicely over the last couple days. Oil today, almost no movement here, guys. Again, I almost am getting bored of talking about oil, so we'll keep it quick. The only thing I just want to remind you, remember the $65 level. Look at all of these lows for years going back, all along 65-ish. If that ever breaks, again, just be a heads up that that would be a huge breakdown. Silver today, same kind of deal here. Silver is upticking a little bit, although it's already off its pre-market highs. It was a little short-term oversold, never quite hit my technical support down here, but getting a bounce. I would still favor a move down to 29 to 28, and that would be where I nibble just a little bit. And let's look at natural gas here. And again, I know a lot of you guys love your natural gas here. For me, I'm a little more indifferent. Doesn't matter too much. It's above this trend line. And remember, if it continues up, then I look to short up here. If it doesn't, no big deal. There's always another trade around the corner. All right. So remember, a good trader, a good investor, is always using the information in the charts to make decisions versus letting emotion take hold. So many people would wake up this morning and see the news about Russia and what Putin's doing and start to freak out or think, oh my goodness, I have to do this. You don't want to let the emotion get the better of you. You want to look at the charts. The charts will guide you much better than social media, mainstream media. That's just the way it is. And again, just look at anyone who follows the charts and trades purely technical without emotion, and their gains will always be superior. All right. On that note, I'm going to bid you farewell. I got to get to my trading room, the Apex Live Day Trading Room, which had another fantastic day of profits yesterday. I hope some of you guys come and check it out. We have a $250 option, which is kind of the lower level. And again, literally in a couple trades, you make that very easily if you have the basic account for day trading. So again, come check that out. And if you want access to our scanner, which scans for trade setups, if you want the ability to talk to us and ask questions during the live trading room, there's the $400 option, which is a steal of a deal too. And just ask anyone in there. It's an amazing service there. Tons of education and profits. All right, on that note, folks, I'm going to bid you farewell. I'll talk to you later. Take care.